This is Options Trading, a beginner's guide to make money by trading options with practical strategies. Written by Matthew G. Carter. Read by Nick Dolle. Introduction. I want to thank you and congratulate you for downloading this book, Options Trading, a beginner's guide to make money by trading options with practical strategies. This book contains proven steps and strategies on how to work your way around trading in options and doing it successfully. It provides you with the key concepts in options trading and various types and positions that this form of trading can take. By buying and reading this book, you will be able to explain how one options contract varies from another. You will also be abreast with the reasons why options are always a good way to trade. Thanks again for downloading this book. I hope you enjoy it. Chapter 1. Conceptualizing Options. What do options mean? How you come across this word before? To an investor, it may not be a strange word, but to a non-businessman, it may mean so many things. Let me share some rather funny scenarios. Before now, if you had mentioned options to me, I would have thought you were referring to some cool, fancy restaurant somewhere downtown. If not that, then I would have surely thought it was a name for a new spa that just recently opened. I hope you will have a good laugh at this one after we're done. To save you all the drama, options may actually be all of the above. However, in the world of finance, which is where hypothetically we are now, it means a totally different thing. So, what are options? Outrightly, options are a kind of security. Much as we hear about stocks and shares and bonds, options are also tradable. That means they actually seek to secure something for you even before you come to actually possess it. In other words, options are actually financial instruments. By being securities, they can be traded. They also allow you to lay claim to owning the asset underlying the contract even without having taken actual possession of it. Options belong to the class of securities called derivatives. I will explain every new word I mention here, not to worry. To sum it up, options are tradable financial instruments belonging to the class called derivatives. What are derivatives? A derivative is a word to refer to a security that has a price which is not independent. The price of a derivative is linked to or depends on another asset. This asset is usually called the underlying asset. When we say the price of a derivative is dependent on another asset, it simply means that the price is hinged on something stronger. Permit my use of the word stronger. How do I mean? Demand and supply forces are not what determines the price of a derivative. What determines the price that a derivative will take is the particular asset that anchors with the contract. That goes to show that the prevailing market price of the financial asset or commodity in any options contract.
Sample complete. Ready to continue?